Welcome back. Now, SEBI Chairman Tuhin Kant Pandey, commenting on the news reports on curbing weekly expiries, said that these reports are speculative in nature. Listening to what he said in response to our colleague Yash Jain's question.
When it comes to options market, SEBI's time and again also spoken about cutting down on excessive speculation and increasing cash market volumes. First of all, what are your views on the excessive speculation in the options market? Also, what has been communicated from the finance ministry? And there were a few suggestions that we were understanding of removing weekly expiry and making it fortnightly or even monthly. Could you help us understand if that is also under consideration?
I'm not aware of any such communication. I think, Harsh, you have been running some story. I think it's your own speculative thing. And what we have been saying is quite out in the open. Whenever we do anything with respect to anything, I've said it before that we need some reforms, but what will be the nature of those reforms and how it will be treated? As per our practice, we always discuss with the markets. We always put out consultation papers.
Well, moving on then, let's focus in on another big listing today, NSDL. The company listed at a 10% premium to its IPO price. Earlier, in fact, our colleague Rachna spoke to the managing director Vijay Chandok about the company's outlook. Let's listen into that conversation.
NSDL is across the entire spectrum of capital markets. It's just that we are very strong in the when it comes to the institutional side with very strong market share numbers. But when you look at the retail and the HNI side, actually it's important to highlight that there is close to 67-68% of market share in terms of custody value in the retail side that is actually sitting with NSDL. We certainly will be increasing our tech outlays as we have moving into the current fiscal year. But the more important thing is that the tech outlays would go into broadly 3 or 4 areas. One would be capacity building, because clearly we are seeing more and more growth in the markets. We are seeing the need to expand capacity to take care of newer investors and more investors coming into the markets, plus more products are also getting added to the markets. We are clearly seeing opportunities to invest in automation. Today there are lots of tools which have started coming using new age tech. We are seeing that it is important. We are an operation-centric company, so bringing more and more of these tech tools, new age tech tools for automation is an area of focus. And the fourth, and I think an equally important area amongst all the 3 I spoke, is customer experience. Clearly, that's an area that requires heavy lifting. That's an area that requires more investment.
One listing of the day, NSDL, 14% higher now compared to its issue price of 800. And the other listing of the day, of course, Sri Lotus Developers listed at a 19% premium to its issue price. That was 150 rupees. It has built on to those gains now, 27% higher now on that stock in comparison to its issue price. We spoke to the management of the company as well on the new orders that they have in their pipeline. Listening to what they had to say.
This financial year, we'll be launching about 6 to 7 projects. This is what our pipeline is right now. So total altogether, about 16 projects would be within 1.5 years. About 16 projects will be starting. Another 5 years, we have got tremendous potential in the micro markets where we are already working. But we are very much open to open up the new micro markets. But all those micro markets, we are looking at a much higher per square feet revenue. And maybe after some time, maybe 5 years, 7 years, yes, we'll be open to go to any of the other areas also. But we'll be always in the ultra luxury market.
Well, a stellar listing from Sri Lotus Developers, up almost 27% for now. But let's slip into a short break then. Remember to tune into the all-new CNBC TV18 Prime, bringing you insights from policymakers, business leaders and economists shaping both the world and India's future. CNBC TV18 Prime decodes global shifts and their impact on Indian businesses, giving you unparalleled insights. Tune into CNBC TV18 Prime at 12 noon for the Global Reset, at 1 p.m. for the Big C, and the Global Lens at 8:30 p.m. Welcome back. Just a quick update from Uttarkashi. At least 4 people have been killed and more than 50 remain missing after a cloudburst that triggered devastating flash floods in Darali village on Tuesday. Personnel from the Army, State Disaster Response Force and local police managed to rescue 70 people by midnight, despite persistent rainfall and challenging terrain that significantly hampered the ongoing operations. Efforts are underway to clear blocked roads along the Uttarkashi-Harsil route after multiple landslides triggered by heavy rainfall disrupted connectivity in the region. Uttarakhand Chief Minister chaired a high-level meeting to review the rescue and relief operations are underway in Uttarkashi's Tharali village.
Thoughts and prayers with the locals after this devastating incident. But with that, we call time on this edition of Business Lunch from Amakshi and me. Thank you for watching. We're counting down to some more important results in just a few minutes from now. Midcap Radar on the other side.
Good afternoon. Welcome to Midcap Radar live from the CNBC TV18 Motilal Oswal studio. I'm Sonal Bhutra. With me, as always, is Vivek Iyer. Some recovery finally. The Nifty is off 80 points from the day's low. That's courtesy the banking index, which is in the green, 160 points higher. Status quo, something that the banks like. But there are a lot of intricate details in the policy outcome today.
Absolutely right. It's an action-packed day, so much news flow, tariff worries, and earnings are flying in thick and fast. We have some important conversations lined up as well later on in the show. So let's start off with the top headlines. Market shrugs off early weakness to trade flat. IT, pharma, and healthcare are the big drags, while financials buck the trend. Midcap index lags.
Zinka Logistics Solutions surges after a strong Q1. Company reports strong growth across verticals. Stock is up over 12%.
Concor under pressure after their Q1 numbers. The company reported another quarter of muted earnings and maintains guidance. Sparks a sell-off.
Rail Lighting sees its biggest single-day gain since January 2025 after reporting Q1 numbers. Company doubles its profit after tax in quarter gone by.
India's second custodian, National Securities Depository, lists on the BSE at a small premium to its offer price. The MD tells CNBC TV18 investments in technology and improving customer experience are the key focus areas.
All right, those are the top headlines that we are tracking for you for the markets. Of course, that recovery is very, very important. And we did get Bharat Forge's numbers a while back, and more important commentary coming in right now. They are talking about how FY26 could be a cautious year for them. It is going to be a challenging period, and especially on the US markets. They say it's a cautious outlook for the US market business for the remainder of the fiscal. The stock which surged after the numbers were reported is off the highs after this commentary because they say FY26 is likely to be a challenging period. And remember, they do have a sizable exposure when it comes to export markets. And we've been talking about that, right, Vivek? The tariff fears. What is Donald Trump's next plan when it comes to tariffs? That's something we'll be closely watching out for.
That's right. Especially if you look at the standalone business, the forging business itself, the main customer itself is the US market, and any tariffs there is something that's been a bit of a worry. And also, the North America truck orders has been on a downward trend since the past couple of months. But this is a special segment, Midcap Movers. Hormaz is standing by the wall to take us through the midcaps that are moving around in the session.
Well, will it, won't it is the question. We'll all know at 2 a.m. tonight was what happens to the eventual tariff announcement. But there are plenty of movers in the broader markets today. Earnings reactions, anticipation of earnings as well. We start off with the losers today then. Transformers and rectifiers came out with numbers recently. It's down 6.5 today. Bosch, after that note from UBS calling the valuation stretch, and the management also saying that they have no such plans to merge their subsidiaries as of now. So 5.5% lower there as well. Godavari Power and Reddington too are seeing some bit of losses up to 5% in today's session. Of course, there are positive earnings reactions that have come in. Zinka Logistics is one of them, 14% higher on that stock. Transrail Lighting too saw a bit of a dip at the start of the session and then has recovered almost 12% higher now. And Gujarat Fluoro too at the highest point of the day, 4% higher is where the stock lies. On the flip side though, some weak results reactions. We saw result reactions from Bharat Forge. The stock is now at the lowest point of the day. But what is also at the lowest point of the day is Carraro India is down 6%. CCL Products has recovered from the lows. At one point was down 8 to 9%. And Veranda Learning is also an earnings reaction, 6% lower on that stock. On the volumes front, of course, there are names that are bucking the trend. Look at Kirloskar Engineering was the stock that I wanted to talk about, 10% higher on that name. Centum Electronics is one of them, and Thymus Medical is the other one, 13% higher on very strong volumes. And IT, Pharma, Realty, all of them are seeing losses in today's session. Midcap IT is one of them. Look at Persistent, Emphasis, Coforge, all of them seeing losses. Coforge now is at the lowest point of the day, 4% lower for that stock. Back to you guys.
Okay, all right. Some interesting names there. Thank you so much for joining us, Hormuz, with those details. Let's get going now. NSE MD and CEO comment followed a report that stated SEBI is in talks with the Finance Ministry to replace weekly option expiry with bi-monthly or monthly levels. He says they will do what SEBI and Finance Ministry decides. Listen in.
The exchanges have to provide the solutions to the markets depending on what the regulatory framework is. So depending on whatever SEBI wants, naturally the exchange will have to comply. And that is their job also. We also have a frontline regulator's job in addition to being able to provide you services and also being a business for profit. But our main role is of regulators, and naturally whatever SEBI or Ministry of Finance decides, we'll have to comply with.
Well, some very important comments coming in there from the NSE MD and CEO. But before we slip into a short break, here's a reminder for our viewers. Unlock a world of exclusivity, expertise and influence. Become a member of CNBC TV18 Access, a premium members-only experience on cnbctv18.com. The membership includes access to CNBC TV18's flagship events, interactions with our journalists, along with curated studio tours, e-learning sessions and masterclasses, and curated lifestyle benefits.
Welcome back. You're still tuned into Midcap Radar. MTAR Technologies reported Q1 numbers, saw strong numbers on a YY basis. Revenues up 22%, EBITDA up 71%. Order inflows were, however, weak. Srinivas Reddy, who is the MD at MTAR Technologies, is joining us now. Mr. Reddy, good afternoon. Thank you so much for joining in. Q1 has been good in terms of your revenue and profit growth. What is the outlook for the entire year in terms of revenue growth and margins, and all the order inflows itself? Can you give us a sense of what will it look like in FY26? Which will be the segments which will contribute the most?
So basically, we are in line with our guidance. We're very comfortable with it. We are given a 25% revenue growth for the year, with 21% EBITDA plus minus 100 basis points. We are on target with that. and the momentum is good the way we are going forward, and also the exports where we are involved in the technology sector. We're not too concerned at this point of time about the tariffs which hit us recently. We got comfortable feedback from all our customers in the United States, but we also have diversified exports to Europe and other countries as well. So we are on line with what we have mentioned earlier.
Okay. Mr. Reddy, the only blip we can see is the fact that Q1 order inflows hasn't been as robust as, we would have liked it to be. In fact, you've said that nuclear segment itself, you're expecting close to 1,000 crores of orders. So current order book, order inflow guidance, where do you expect to end FY26 at?
See, as I said earlier, we're almost there. In nuclear division, we are expecting close to about 1,000 crores of orders kicking in over the next 3 months to 6 months. Most of it should come in the next 3 months, and the rest over the next 6 months. So it's not part of a business plan for this financial year, but which have to be executed within 3 years period. So we're going to have a very exponential growth in the nuclear segment, and we're very excited about it. We're almost there in booking those orders. And then we also expected huge orders coming in from our clean energy customers, from Bloom, from aerospace division as well. All these orders will accumulate over the next 2-3 quarters, and we would have a very strong order book by end of the year.
Mr. Reddy, while you talk about clean energy, what about the nuclear energy segment? Kaiga 5 and 6, other refurbishment of reactors, that is something that you mentioned as well. So can you tell us more about the receivable days? Working capital days have increased to 267 versus 229 earlier. What was the reason for this increase? You had mentioned that some of the receivables from Israel that had gotten delayed. What's the update there?
Yeah, we received the receivables by first week of July. So it was just a delay because of some ongoing wars going on there, but we definitely received it by first week of July. So I don't think that's an issue at this point of time, and we have working on some long-term projects with the nuclear division, so which will get dispatched during the year. So our target for the end of the year is that we're looking at about 200 days of working capital by March of this year. That's what we're looking at.
Okay. Mr. Reddy, one particular question that is causing quite a bit of uncertainty, especially for players who are exporting, is the question of tariffs. Now, number one, what is the applicable tariff for you? What is the kind of tariff rate you are expecting, or what are you working with internally? And because of this uncertainty, have you seen ordering activity get impacted, especially from Bloom as well as Fluence?
I have absolutely not seen that. In fact, post the tariff announcement, Bloom has given a huge forecast for next fiscal year, which is a very positive sign. And also from various of our aerospace customers, because we are in a technology segment and we have been very cost effective in what we are doing with all these customers. I don't think we'll have any kind of effect in terms of the 25% tariff what the US government has announced.
Okay. So what is the capex plan for FY26 in that case, Mr. Reddy? Will you be spending more on certain segments, be it clean energy in particular, because that's been a margin driver for you?
We are looking at more of the oil and gas sector. As I mentioned earlier, we signed a long-term agreement with Weatherford. We are setting up exclusive facility for them. We have almost done their prototypes as well. So we'll be spending close to about 100 crores of capex this year for various areas, including certain areas in nuclear division where we have to execute close to 1,000 crores of orders in 3 years span itself. So if you're executing like 60 crores in the past per year, we're looking at almost 300 crores of revenues which we need to orders which we need to execute each year, or more than that. So that's the kind of plan we have. We are gearing up towards that, and that's something which we are really looking forward to after a number of years, especially in the nuclear division.
Okay, Mr. Reddy, this particular conversation, we'll keep it a little short. So many earnings are trickling in, but thank you so much for your time. Wish you all the best for the rest of FY26. Well, we'll now slip into a short break. The management of NIIT Learning Solutions joins us next to discuss the Q1 earnings and the way forward. Welcome back to Midcap Radar. Well, we have another corporate conversation lined up for you. NIT Learning Solutions posted a muted set of earnings along with its profit falling close to 18%. A couple of one-off exceptional items too in the P&L. We'll understand that as well as the outlook going forward. Mr. Vijay Thadani, who's the Vice Chairman and Managing Director at NIT Learnings. Thank you so much, Mr. Thadani, for joining us. Well, first up, we want to understand the nature of the exceptional item that is there in the P&L. And we understand that at the start of the year, you had given an FY26 guidance of 10% revenue growth in constant currency terms and margins to be in the range of 20 to 21%. Do you maintain that guidance?
Yeah. So let me answer first the first question. The exceptional item is for a good reason. We did an acquisition during the quarter.